I've got 30 years experience as a trader, analyst, financial commentator. We're going to take a look at 3 distinct groups today that you may see in your day-to-day trading. We're looking at data point releases, we're looking at market influencers, and we're looking at indicators. So without further ado, we'll start off with the data releases and see what I can come up for you. So as you can see here, we've got a list of 6 data releases: non-farm payrolls, NFP, CPI, PMI, so they're interest rates. You've got JOLTS, which are to do with job openings, hirings, firings, and they were quite important last week, and I'll go into that in a minute. And then you've got the classic GDP, which measures your economy. So we'll start with that one, and immediately I'm going to put that at the bottom, which is quite strange for me because my mantra is growth trumps everything. So we may move that around in a bit, but all else fails when you're looking at and analysing the markets. If you're growing and you're growing higher than what it costs you to make stuff or what interest rates are, you're generally going to see the economy and your investments grow. So that should potentially on that basis be higher, but we'll look at why not in a minute. Interest rates, I'm instantly going to put to the top, basically at the centre of everything that goes on, which is why we obsess about all the data surrounding it. So for me, that's going to be in right at the top. Obviously, this data has a bit of a US bias. Non-farm payrolls, you can look at any economy, you're looking at the jobs, non-farm payrolls. It's the biggest piece of data. It's the most watched on a monthly basis. Right up there, jobs and growth is probably the biggest part of the economy. CPI, I'm going to put that in. I'm going to put it side by side, actually, rather than third. They're a dual mandate, and they flip-flop between which one is really the most important. We've gone through a period recently since COVID of this overinflation that we've had to try and control. But if you look at since the GFC in 2008-9, we've had mainly low inflation, negative inflation. In some situations, we had deflation back then, and now we're dealing with inflation. So these things flip-flop around, and obviously if you've got inflation, the rates are high. If you've got deflation, interest rates become low to try and stimulate things, try and make people invest and try and give a higher value to things. So JOLTS, I'm going to put it in the old B level for the minute, and I'm going to put PMI right next to it, because think about the economy. It's changed a lot. Manufacturing doesn't take place so much in the developed world. It's in the developing world, the emerging markets. So it's about 30% in the US, 70% of the economy is the services. So you will see on a monthly basis PMI reports and the ISM report, which is the daddy boy version of PMI, divided into manufacturing and services. We were getting non-farm payrolls for July. Last week's JOLTS report was for June. What that actually showed us were that even though people weren't being fired and they weren't quitting, the rate of hiring in June dropped by 200,000. When I'm trying to encourage people to look at fundamentals, I want you to look at these details. That to me was telling us that as we went into Friday's jobs data, we were likely to see some big revisions down. That is what we saw. We saw a weak number and the biggest revision down since 1978. I'm actually going to just shove up GDP, because GDP, growth trumps everything. That is another backward looking measure. It's 3 months behind, but we have this thing that I encourage you to look at, Atlanta GDP now, which the Atlanta Fed runs in real time using all the data that will eventually be printed in the GDP release. It becomes real time, it becomes important. Right, okay, so we've got a feel for what the data trends looks like. Let's have a look at those influencers. These are people who are here all the time. I originally called them the Trumpton Fire Brigade, and I describe them in the weeklies as talking heads. And if you're serious about markets, you need to know what these people are saying. They literally have a massive impact. Who do we have here? We've got the great orange one himself, Trump. His ex-bestie, Elon Musk. We'll discuss Powell as an individual, but we'll also consider it as the governor of the Federal Reserve. It's probably the most important, supposedly independent role out there. We've got ICT, who has a lot to say in your world, really. A lot of you people in the demo world, the first instance you have of seeing trading out there in a strategy style. You've got Warren Buffett, the sage of Omaha, possibly greatest individual investor of all time. We've got the head of China, President Xi Jinping, and we've got Mrs. Lagarde, who's currently the president of the ECB. She's been the president of the World Bank and IMF, I think, as well. She's managed to land some of the most male-dominated roles in history, so she obviously has a lot of innate talent, but we'll discuss where her role sits in a minute. So I'm going to just instantly start off and put, on the basis we said interest rates were the most important, the man who actually dictates and is chairman to the actual council that dictates what US interest rates are, and US interest rates dictate generally what they are in the rest of the world. Normally, he's got to be in number one place to start with, but we'll discuss in a minute. At the moment, Donald, he's obviously looking at things in a slightly different way to what historically presidents have done, including in his own party. So he's got a lot of macro market moving things to say. He's in second place for a minute. Elon, you're just relegated at the moment. You're inconsequential. Your mate next to you at the minute. Warren Buffett, within his own sphere, and is very important, but it's not necessarily market moving. He has his own style. He's generally looking for this 10% return on assets, grow, compound, all the sensible long-term stuff you're doing, but it doesn't necessarily move markets as much. Xi Jinping from China, obviously very important, and we'll put Mrs. Lagarde next to him to start with. So what's really going on in the world? We've got this whole Fed independence debate going on, and for markets to not price in a risk premium onto interest rates, and therefore the higher the interest rates, lower values across your assets, you've got to believe that they're making independent decisions based on good data. Now, as we saw last week, can you trust the data at the moment? Trump has jumped in, sacked the people who make the jobs data, as well as criticised Powell. So Trump or Powell, who's most influential? Powell won't last forever. Trump's definitely there for 4 years. So at the moment, we're going to have to say that Trump is at least level with Powell for influence. As I say, it's a bad sign if he does. Be careful about Trump getting too much power. The markets will react badly and they will put in a risk premium, which means assets will fall if he starts to get too much direct control. Likewise, ECB, massive. That's 27 nations all meeting. She's the chair. French start with, but that shouldn't have any influence because there's an individual governor that's in charge of French things. Xi Jinping at the moment, again, they are the biggest exporter in the world. They've got deflation. They're exporting lower prices to the world. They've got just as much problems with fiat money, money printing, fiscal money out of control as America has. Policies are going to be very important going forward. So I'm going to move him up into second place. Elon Musk, obviously very noisy, obviously a serial entrepreneur, very clever guy, but he's just becoming a little bit too political. He may well become influential with a third party. People are trying to encourage him not to do that and to stick to his day job and grow the companies. Really crazy spat to have with Trump in public. So I think we're about right there. ICT is just literally a strategy that some people follow. It's based on a lot of other strategies that have existed in the past. Very much influential in the technical analysis world, but that doesn't move the markets. That's a reflection and a response to mainly what these other people on the chart are doing. There may well be some contentious issues that I've said there. Please reply and give us what you think. And we'll now move on and have a look at the indicator side of things. Right, so as I said, we've looked at the data points, we've looked at the influencers, and now we look at the back end. So how does that all sit? The way I look at fundamentals, that is the how, why, and who. What and where is what you get from the technical side of things. That's where you can literally come to it 2D, look at the chart, and you can participate in the markets and have a good feel for certainly the price range of what's going on and where the trends might go. Now, anyone that knows me and has followed me, you know where I'm going to go straight away, and we might move these around, but I can't not say that Elliott Wave's the most important. If you're not listening to me, why not? I love a Mackie D's, not just for the waistline. I love a nice glass of bubbles. So anyone that was around the markets when I was, Bollinger was the way. A Veuve Clicquot moment like they do on the cricket. That is my go-to. I love Elliott Wave, not just because there are measurable waves, but it's a sentiment engine. And the market, to me, is a sentiment engine. You're collecting everybody's view. Everyone's view is viable. It's based on a reason. There's so many different players in the markets. They're all in there with a different time frame, a different strategy, a different outcome required. And we're trying to find who at any one time has the most influence to be able to push the markets in any one direction. That means supply and demand. And at the end of the day, volume is king. We haven't even got volume defined here as the list of things, but we'll roll it into the fact that it will sit on a lot of these ways of looking at the market. You'll always have your volume profile attached, but whoever's got the most volume that's followed is where the markets are going. So you can be fundamentally and technically right about what should be happening, but unless you can make the money move, nothing's changing. You've got to believe that the reasoning behind why they were there in the first place still exists. When you're looking at these indicators, you're trying to find the best fit at any one point. You should really be looking at it and saying, what is the next best fit? If anything changes, you need to automatically be ready to go. You don't really want to be going back to first principles. You should already have done the work. That's another reason why I like Elliott Wave, is because you're ruling things out, not necessarily in. And you can say that if certain things are invalidated, then you are now looking at consolidation rather than a breakout, or vice versa, or you're about to have an extended consolidation. And we're really looking, whatever position we're in, we're looking for impulsive parts of that move, the wave threes, so there's a lot of powerful stuff within it. Very happy to talk you through it at length on another video. Planty's Discord, then yes, we should be all over that. I'll be posting things in there regularly. As most users know, you'll see the weekly blog, etc. And I'm trying to drag together lots of stuff that I'm seeing for free, because I know that I don't want you having to go behind a paywall. Looking through LinkedIn, looking at all the major strategists and the commentators are saying out there, pulling them together and trying to say, look, this is what's influencing things. This is why you're seeing flows that are out there in the market. The whole thing we just set up, why is the volume sat there when really that data point over there that everyone looks at is suggesting the opposite? We want to see whether that was in consensus. Has it hit that consensus? Is it not beat consensus enough? Is there something else that we know is coming up in a few days that's really got people's eyes? So I'm trying each week to make sure you have a chance of looking on the ACG blog and being completely up to speed just how professional market commentators would put you. And you're getting that for free. I love MACD because it's a momentum indicator. And a lot of people say momentum indicators are backward looking and a bit laggy. RSI is similar to that. More prices. Momentum is more the movement of the averages. A lot of people moan because the market will have turned and done the crossover before or after the market's made its move. You're looking for the rejection, the relationship between the lines. You're looking for how the actual histogram looks. Is it in negative momentum and recovering, or positive momentum? You want to see how your instrument is moving against the moving average. This is what Bollinger Bands are. Again, you can define the moving average. Generally, it's the 1 and 2 standard deviation bands against the 20-day moving average, or 20-period moving average, however you want to look at it. People are looking for mean reversion, so the mean is the average between those bands. When you get to either extreme, 2 standard deviation, the most simplest thing is people expect indicator to reverse, to at least go back to mean, and if not, generally cross it and go to the other extreme and the opposite, 2 standard deviations. It's another confluence tool you add, and you're looking for that to have totally gone into reversion, aligned with a few other indicators. Whether you like Elliott wave or not, based on the principles of Fibonacci, absolutely love it as a mathematical concept. It's a great thing to teach your kids. It's all about the growth rate of 2 rabbits in a field and how quickly they would grow. Markets follow Fibonacci patterns of spurting growth rates, consolidation, and then moving forward and pulling back. Stochastics, that's just another kind of oscillating thing alongside RSI. They're all smoothed around the same basic premise. Has added value. I have it in second place because I don't use it as much as I should. That's not to say it's not important, but that does actually put in some important areas of crossover within the Fibonacci relationships. It is a powerful tool. A lot of people like using it. ATR, tricky one. You'd probably say actual true range, important to know, but if you've got your strategy right, why should I be bothered? Actual true range really should be at the heart of your stop loss. You can actually expect where it's already traded. So if you've got to have a deep reason for having a stop loss within what the actual true range is, otherwise you're leaving yourself open to wickage. We'll put ATR up there at the top because it should be how you do your market setups. I'm going to drag my Discord out, the oscillators into the middle. Exponential moving averages, better than simple moving averages really, because it's taking account more of the extremity and pace of the move, so they should at least be in line. MACD, that can drop down, but I'm keeping that second just because it's one of my favourite ones. Bollinger Band, that's going back into second place. Elliott wave, or substitute that with a strategy that you're all over that shows you a combination of sentiment as well as price action, I think is really important. ATR is probably just about one of the most important things you should consider, because that's part of your basic setup of your stop loss. So that's my view. You may disagree. A lot of people talk about don't make things noisy. It's good to have a simple strategy, but I like to have things in the background to give me positive and negative confluences within the debate. Hopefully you find that interesting. Nice wide range of opinions on the data points to look at, the influences, who may or may not be at the top of the list, why they should be at the top of the list. Hopefully you can take something away from that. Drop us a line below, likes, dislikes, and any questions. I look forward to speaking to you again.